Good day everyone and welcome again to our channel where we discuss trading, forex, cryptocurrencies, stocks and every other thing that could help you stay consistently profitable in the long run. So without further ado, this is the Catch the Wave Strategy Advanced, and you should know that it is time to scale up your trading business. So you should be glad this video is reaching you right now. So stay tuned, stay glued. And meanwhile, if you've not subscribed to our YouTube channel, please do well and subscribe. If you're new, you're welcome. Try and watch our previous video on Catch the Waves so that you will understand this one better. Catch the Wave is a simple strategy. I've gotten a lot of thank you messages from you guys, and I so appreciate your appreciation. I appreciate you for honoring and acknowledging my work. So it's actually understandable. You understand it if you're new here. So please do well to like the video if you find it useful and share to others so that they will also find it useful. So what are you going to learn today? You're going to learn top-down analysis, confluence factors, lower time frame break of structure, how to place your stop loss or stop loss placements, and when not to khrh. So leveraging on the previous video, khrh means keep half and ride half. So when to keep half and ride half, and when to just close your profits immediately. You are going to be knowing the tricks and hacks behind it. So for this one, we are going to be talking on top-down analysis. We actually broke the video into fragments so that you are going to have a full understanding, so that we are not going to rush things up. So stay glued and you're going to understand everything. Top-down analysis. I'm going to guide you how to do this top-down analysis, how to fine-tune your trades, avoid bad trades, and increase your win rate. So what the heck is top-down analysis? Consider this scenario. You want to buy on a chart because you see it's in an uptrend. Let's say a 4-hour chart, and you see it's in an uptrend. You go to the daily time frame and you see that the daily time frame is in a downtrend. So what would you do? For me, I'd rather avoid a trade. Or you should look for a chart that has its daily time frame in uptrend, and you come to the 4-hour time frame and see that it's in an uptrend. That is the chart I would rather trade because the odds are more in my favor. So top-down analysis, we start from higher time frames to check if the odds are in our favor. We note the long-term trend and trade it on a lower time frame. That is what I'm trying to say. You look at the daily time frame, you see it's in an uptrend. You go to the 4-hour, you also see it's in an uptrend. I would rather take that trade than one which the daily time frame is down and the 4-hour time frame is up. So we find good entries on the lower time frame. Then we also note the higher time frame key levels. So if I see the market is in a key level, of course, when the market goes to a key level, we are going to see that it turns most of the time. So what do? We just stay away from the charts or any other thing I would let you know in this video. So if you look at your screen, you see that I have Telegram on my right hand side and a chart on my left hand side. This chart on my left hand side, we actually share the signal on our Telegram channel. So do well to join our Telegram channel. The link is on the description. Please do that now. And this is it by AUD/USD, and I also gave the reason for entry, everything, and I'm going to share it right now here. You see that we actually profited from it. So stay tuned, watch us till the end. So why did I start buying? If you look at this chart, you will see that the chart is in an uptrend. Looking at it from hindsight, you see that it's in an uptrend going towards the upside, and it has a series of higher highs. These are the higher highs, and these are the higher lows. So these are the first thing I have to look at the chart. What is the direction of the trend? What is the market structure? That's the first question I'm going to ask myself. What is the market structure? So the market structure is uptrend. Test number 1 passed. Now, where is the key level? Please, I'm not just saying something. We've covered that in the previous video. So if you've not watched the video, do well to go back and watch it. Catch the Wave Strategy. We now have a key level here. You see that the price has respected this level. The price found it difficult breaking through this level, went in, came down, went in again, came down before it broke it the third time, and now it's coming back. Of course, this tells me that there is something so important about that level and I should look to trade it. That is why I call it a key level. The price sees it and likes it. So the price always keeps going there. So what do? I go to the lower time frame. Let's go to the lower time frame. So this is the 15-minute chart of that AUD US, the 4-hour chart you just saw. And if you can look, you would see that this retracement now was the same pullback or the move back into that key level I talked about. This is the key level. So what did I now see? I see that the price is respecting a trend line. This is the trend line, and it has a touch first time here, second time here, third time here, fourth time here. So it has made 4 touches on this trend line, showing that this trend line, the market is respecting it, and the market knows that, okay, that is also a kind of key level. So now the market went after touching the 4-hour key level. Remember, the 4-hour tells us that it's in an uptrend. So we come to the 15-minute chart and we find that this market has broken out of the trend line that it has been respecting for long and pulled back. So that will be my entry, showing that this market is now ready to move up, and we bought there around 0.7200. That was where we actually bought, and we made profits from that. You can see that this strategy works. It's not magic. It's not something we cherry picked. Actually, it's a trade we took. We took a lot of trades last week, although some weren't shared on the group for some reasons, but most of them were profitable. So let me walk you through another chart again for better understanding, and because the market doesn't just make one kind of movement, the market moves in different kinds of ways. So let me show you another one. So if you even look at this chart, you will see that the date here is 10th June. So this trade was taken today. Today is Friday, and we just used this trade to close for the week. So how did the trade go? I look at my chart again and I see that it's in a downtrend, making a series of lower lows, lower lows, lower lows, lower lows, lower low, lower low, and this was the lower low we looked for entry, and lower highs, and these are the lower lows. These are the lower highs, 1 2 3 4 5 6, and then these are the lower lows. So after making this, I know that it's in a downtrend, and looking at it, we see that it is moving towards the downside. So that makes me look for a sell. I wouldn't be looking to buy in this kind of market because I see that the market is moving towards the downside. And then we come to a lower time frame. This is the 1-hour chart of New Zealand against the US dollar. So let me take you to the 5-minute chart and see what I saw there. So this is the 5-minute chart, and this is that same key level I highlighted on my chart on the 1-hour time frame. So what did I see? I see that the market was moving impulsively in an uptrend, and then when it got here, the game began to change. The bears began to take over. It began to fall. So how did I look for entry here? I see that the market respected this trend line and formed a kind of chart pattern called the head and shoulders pattern. This is the shoulder, this is another shoulder, and this right now is the head. Can you see that? So it is called head and shoulders pattern. We now have this head and shoulders pattern, and this head and shoulders pattern is a powerful reversal pattern which I so love to see. I would also walk you through the double top pattern, which is like this. The market moves in, falls, move again, and falls. This is the neckline, falls and retests the neckline and begin to fall again. This is also a powerful one I love to see. So let us finish with this one first before I take you to that one. So as the market made this head and shoulders pattern, it immediately broke down and moved in. You can see this blue candle after it broke down of the trend line. It moved into retest. That was my entry. And that was my stop loss higher than this second shoulder, just above the second shoulder. You see that I looked to drive the market down to the, remember the swing low, the previous lows on the H1. That was my take profit level, and I rode the whole move downwards. That was risking about 10 pips to gain 50 pips. This is a 1 to 5 risk to reward ratio. Isn't that great? So if, for instance, I risked $1, I would be getting $5. And if I risked $1,000, $5,000 to end the weekend is not too much. It's okay. So how would you see this kind of rates if you take them? Even if you take them once a week, you'll be a millionaire in the long run. So this is how we do our things here. Let me take you through the third video. Now, the third chart, so that you watch it and see how it happened. The third chart is showing another chart pattern called the head and shoulders pattern, which I just drew here now. Let's go there quickly. So we talked about forex in the previous two charts. So I'll be using this one to talk about, because this thing happens not only on, it doesn't happen only on forex, it happens in crypto, it also happens in stocks. Any charts, any market, it happens there. So feel free, any market you're trading, don't just categorize this strategy to a particular type of market. Now let me take you through the signal I shared yesterday. This is VeChain. Okay, here is it. So VeChain against USDT short. I gave them the signals here, and we were moving deep into it. We smashed TP1, we smashed TP2, we smashed TP3, and we are still moving to TP4. So very soon my TP4 will be hit, and I will still make money there. So if you've not joined us, you're not doing yourself good actually. And don't forget, we also drop reason for entry there. So this is the VeChain chart. As you can see, the market is in a downtrend. This is live on TradingView actually. So the market is in a downtrend, making a series of lower lows. You can see the lower lows here. So as it was making these lower lows, it came to a key level. You can see that key level on my chart. Or let me just use this. Let me use this to indicate it. You can see a key level on my chart here. And let me zoom out. As you get, sorry for that. So now, having this key level on my chart, you see that the market went in there powerfully and started falling back. This is a pin bar. This one is a pin bar. As it made a pin bar, I went to the 15-minute time frame. Let me go to the 15-minute time frame. I come to the 15-minute time frame, and how did I pick my entry? I come to the 15-minute time frame and I see a double top chart pattern. I told you about the double top. This is the double top having two tops. This is the first top, this is the second top, and this is the neckline. This is the neckline. So I entered immediately. Actually, I used the big stop loss, and then the market went and started moving down. It moved down, and as you can see, the market, you can see where the market is right now. You can see where the market is right now. This is no jokes. We've made a lot of money so far, and we are still going to make. I still have the TP4 target open, and it's very close to it. So I'll soon tell them, guys, TP4 has been hit, smashed like hot knife through butter. Just the trick here about multiple time frames. You see a signal, you go to the lower time frame, look for a chart pattern that has formed, a reversal chart pattern that has formed. I told you the reversal chart patterns I trade most often is the first one I gave, which is trend line break, the second one I gave, which is head and shoulders pattern, and the third one, which is double top. At times, if it's in an uptrend, you want to look, you'll be seeing something like inverse head and shoulder or inverted head and shoulders pattern. It's the same thing, just that it is the opposite way downwards, and then inverse or inverted double top pattern. I also like the triple top, but that rarely forms. In my own experience, I don't see it most of the time. Most of the time I see the double top and the head and shoulders pattern, and they have proven to be the effective ones I have. So with that, I said we are near the end of this video. Look at it. Then we also remember I'll walk you through on how to set your stop loss so that you won't get stop hunted. A lot of people, they enter the trade, the market hits their stop loss and begin to move in their favor. They don't know why. They don't know how to hide their stop loss so that they would avoid this kind of occurrence. So this is just how I do my trading. I go to the lower time frame, find the chart pattern, and then I also find the take profit levels here. So let us go. I have something to show you before we come to the end of this video. So I believe you must have learned something from all this I've walked you through. We've talked about top-down analysis. I'm going to walk you on our next video on confluence factors. So confluence, just 2 or 3 or more things coming together to say, yes, this trade should not be avoided. This trade must be taken. This is an A1 trade. You must take it. So we actually use this filter to filter the trades out there. Not all trades are worth taking. I believe you must have liked this video. Please do well if you've not. So what's next? Please like this video if you find it useful. Subscribe to this YouTube channel, please, and turn on the notification bell so that you'll never miss a video from us again. Because as you can see, we are not just dishing out irrelevant information. We're dishing out something that could help you in the long run. And turn on the notification bell, share as well, and cheers to your continued success. Forever we'll meet at the top.